Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York. It's Monday, December 28th, 2015, and this is Trending Markets. Dramatically off of the lows of the day, we do have the Dow Jones Industrial Average with about 15 minutes of trading still left in it, closing, or looks like it will close off about 30 points on the day, currently down about 27 points at 17,524. The first chart that I do want to look at, and let's go ahead and kind of blow this one up, but the first chart I want to look at is just a basic daily chart of the Dow Jones Industrial Average in candlestick format. And here's what I find interesting. We'll go ahead and blow that up. But if you take a look at this, we are now at a point in which the market is slightly lower. That's our close right here. The open is the beginning of this red rectangular box here. So the open is absolutely the highs of the day. The current is near the highs of the day because it's come up. But look at this dramatic low that we saw in the market as this market went down and actually touched 17,440. So we had a dramatic low that came in here. We're now over 100 points off of that low, moving back up. And that really, to me, is a pretty solid sign that we're starting to find some sort of support. Realize we're coming off of a structured three-day tremendous rally starting on the 21st. So we got a very, very short Christmas rally. Took us to these tops at about 17,600. And then, of course, on Friday, we had the market settling lower. We have lower pricing today, but as I said, nominally lower. The one thing that is hurting a lot of the equities is, of course, the oil complex. And oil right now is down again after a little bounce last week. And to me, I'll call it a dead cat bounce, because really what you're seeing is, I believe, was short covering and really not a whole lot of buying coming in the market. This is a daily chart that we're pulling up. And the one thing that I noticed last week, more than anything else, more than the fact that it moved up almost 10% in a week from $34 a barrel up to 38 plus. But what I really noticed is whenever you have the market, whether it's selling off or when it's moving higher, you typically don't get these large gaps. You had a gap here, and not a price void here because you had the highs and lows kind of coming in, but here you had that price void. And the basic theory behind gaps is that the market in this particular type of gap will come down and fill this gap, which means that that's telling me that at some point over the next couple of weeks, we will see oil go back to $35 a barrel. And as you can see, it's currently trading almost at 37, 36.82, but that is down $1.25 a barrel, or 3+% lower on the day. Now, US dollar also under pressure, but nominally under pressure. It's at 97.95, and if you recall, this is right where we would expect to possibly see some support in the market. Let's go ahead and kind of blow up this one chart that we've been using. And this chart, of course, is the euro dollar and US dollar really put side by side, or top to bottom, I should say. And on this, we have put a couple of levels that I believe to be pretty critical. And in terms of the dollar, 98 is a pretty critical point. We're at 97.95. 97.92 is that point we want to see effective closes above, because that will then become support again rather than resistance. Roughly 109 in terms of the euro dollar in terms of the support level, and I actually don't have the 23% retracement level in. Let's go ahead, in fact, and pull that up. So traders, that's exactly what I just did. I ended up pulling up a couple more of the key levels that we want to look at in terms of the current price of euro. And right now we have some real resistance. This is a 50% retracement level coming in roughly at 110. So that would be the point that I would currently look at as resistance. We're at 109.72, so about 0.25 basis points from this particular price point that we're at currently. And so lastly, I do want to look at the Standard & Poor's, because I do believe that I do believe that there's still some real opportunity to the upside. It's simply a matter of where we're actually going to enter the market. We're getting different information whether we look at a half a day or a daily. First, let's go ahead and look at our daily on this. And when we do that, we can see a couple of things. And one of the most important things that we see is that, in fact, when we consider our moving averages, this is the long-term 200-day in blue, 50-day, we absolutely got that cross. This happened back on Thursday of last week. But you now have them coming in and narrowing, but you've got this red candle that's well off of the lows of the day, much in the same way that we saw the Dow Jones, but you're also getting a pretty clear-cut three-river evening star here, and so that's something we want to definitely take a look and see if it develops there. My sense is I'm looking to be a definite buyer if we get a break above these moving averages, then placing our stop there. Right now, we are sidelined in a holding pattern. This has been Gary Wagner for Trending Markets. Talk to you tomorrow. Bye-bye.